The push for real-world asset, RWA, tokenization on the Solana blockchain is growing as Ondo Finance has expanded to the network. As announced on X, the institutional-grade RWA outfit said it is expanding its bridging solution to Solana. Based on historical precedent, this bridge integration has a massive positive upside for SOL and ONDO, the native assets of both protocols. According to the announcement, Ondo Decentralized Verifier Network, DVN, has expanded to Solana. With it, the proof-of-stake chain can link to other EVM-compatible chains like Ethereum, Arbitrum, and Mantle. As it noted, through the bridge deployment, USDY holders can move assets across the largest crypto platforms to drive a new value system. With more than $170 million worth of USDY on Solana per total value locked on the tokenization platform, users can now do more with this integration. This new bridge unlocks frictionless RWA mobility, empowering users to move USDY fluidly without introducing extra counterparty risks or requiring inefficient capital reserves. The announcement reads, noting that each USDY transfer between chains is maximally capital efficient, requiring no additional external capital to fill transfers, as would be required via third-party bridge environments. Over the past few months, Ondo Finance has collaborated with World Liberty Financial in a bid to drive its tokenization agenda. For its strides, it has managed to place its token ONDO in the spotlight. With an active product in high demand by institutional investors, the ONDO price may gain an additional boost over time. Solana is an established blockchain protocol with millions of users. The access to liquidity, all of which may eventually flow into USDY and Ondo Finance-backed solutions, can fuel a big rally. At the time of writing, the price of ONDO has rebounded, up 1.05% in the past 24 hours to $0.9215. Just like ONDO, Solana has also staged a breakout, up 2.2% in 24 hours to $150.55. ONDO has other primary growth triggers like the recent Binance listing that can also help boost its price outlook. With growing adoption and exchange listings, the token's accessibility is growing, setting the underlying coin up for a possible breakout. Meanwhile, there is a growing quest for RWA tokenization in both the decentralized and traditional finance ecosystems. With its recent technology, Ondo Finance may soon be positioned to take a significant market share. Ondo Finance's initial product is a DeFi protocol built on Ethereum that provides liquidity services between protocols. In V2, it completely shifted its focus to tokenizing real-world assets, RWA. It introduced fund management products that support various underlying assets, such as U.S. government bonds, notes, and U.S. money market funds. Ondo launched a DeFi protocol on Ethereum that provides liquidity services between protocols, also known as LAS, liquidity as a service. After Compound introduced liquidity mining in October 2020, the market entered DeFi summer, where many protocols used liquidity mining to bootstrap their projects by offering high mining rewards to attract users. However, as more and more protocols introduced liquidity mining, low APY incentives were no longer sufficient to attract capital and users to provide liquidity to the protocols. To compete for users, protocols chose to bear high costs to attract users to their projects at the beginning by offering extremely high APYs. However, such high APYs are not sustainable. To solve this problem, since September 2021, protocols like Ondo Finance that provide sustainable liquidity services for other protocols have gradually emerged in the market. Ondo Finance initially focused on providing short-term, low-cost liquidity to projects. Ondo Finance operates based on a flexible mechanism, creating a diverse and easily customizable financial ecosystem. User projects can participate by depositing tokens into Ondo Finance's liquidity pool for an optional term. The platform will then send this crypto asset to liquidity pools of equivalent value from trusted partners such as Frax, Fei, Angle, Paladin, Near. The newly created liquidity pair is transferred to decentralized exchanges such as Uniswap or SushiSwap to perform the farming process. At maturity, Ondo Finance automatically withdraws liquidity from the exchange along with farm profits earned back to the platform. Assets and fixed interest rates for partners will be returned. The remaining cryptocurrency will be transferred to the project sending the token. This creates a flexible cycle, allowing users to participate in the farming process to earn stable profits, avoiding many unexpected risks. However, with the prolonged bear market in the cryptocurrency space, TVL, total value locked, in the DeFi space has significantly shrunk. The market's attention has shifted to the vast world of real-world assets, aiming to transfer off-chain assets to on-chain assets and opening up the narrative of RWA. DeFi blue-chip protocols like MakerDAO have already introduced RWA-related businesses. Ondo Finance has also shifted its business focus to version 2 and now specializes in the public bond market. This article will provide a detailed explanation of the operation mechanism of Ondo Finance's latest products, OUSG and OMMF, as well as analyze the project's economic model and development status. Ondo Finance Introduction. The founders of Ondo Finance are two former Goldman Sachs employees. The project completed a $4 million seed funding round in August 2021, led by Pantera Capital. In April 2022, it completed a $20 million series of funding round, bringing the total funding received to $24 million to date. Ondo Finance is currently focusing on real-world assets, RWA, and has launched funds that support a variety of underlying assets, including U.S. government bonds, bills, and money market funds. This offers investors a diversified selection based on their risk appetite. Ondo Finance charges an annual management fee of 0.15%. The project was founded in 2021 by Pinka Surana, formerly the vice president of the tech team at Goldman Sachs, who led their blockchain development team. Team members have rich backgrounds from various institutions and protocols, such as Goldman Sachs, Fortress, Bridgewater, and MakerDAO. The organizational structure of the project team follows a standard fund structure, including limited partners and general partners, as well as qualified custodians, fund administrators, and vault auditors, among other third-party service providers. Product development. Ondo Finance was officially launched in August 2021. Its initial version, V1, primarily offered two products, Ondo Vault and DAO Vault. Ondo Vaults are designed to provide users with fixed and variable returns, while DAO Vaults facilitate token liquidity between different DAOs, decentralized autonomous organizations. Essentially, both are tools for capital management. In the first 6 months after its launch, the project's flagship product was the Ondo Vault. A specific number of vaults would be made available for subscription every month. However, 6 months after going live, Ondo developed its DAO Vault product, aimed at providing liquidity services between different protocols. This led to a decrease in the frequency of opening new Ondo Vaults. With the compression of DeFi yields in 2022, the Ondo Finance team decided to phase out vaults and loss, collectively called Ondo V1. It introduced Ondo V2, which includes tokenized funds, Ondo Funds, and Flux Finance. It was launched in January 2023. The core feature of Ondo Funds is that it allows stablecoin holders to invest in bonds and U.S. government bonds. Investors will receive tokenized fund shares that can be transferred on-chain, including the U.S. Government Bond Fund, OUSG, the Short-Term Investment Grade Bond Fund, OSTB, and the High-Yield Corporate Bond Fund, OHYG. Ondo Finance charges a management fee of 0.15% per year. In August of this year, Ondo Finance officially launched the USD Yield, USDY, a tokenized note backed by short-term U.S. government bonds and bank demand deposits. U.S. users and institutions cannot use USDY, and it can be transferred on-chain after 40 to 50 days of purchase. Ondo previously launched 4 fund products for U.S. users, supported by different underlying assets. Among them, the largest and most prominently displayed on the official website is the OUSG fund. To expand the use case of OUSG, Ondo developed its own decentralized lending protocol, Flux Finance. In February, it announced its launch on the Ethereum mainnet. Borrowers can use OUSG as collateral, and lenders provide stablecoins such as USDC to earn interest. Currently, the total value locked, TVL, in Flux Finance's liquidity pools has exceeded $60 million, with OUSG contributing approximately $37 million. The outstanding loans in the protocol amount to about $25 million. Risk warning. The real-world assets, RWA sector holds significant potential this year, with numerous on-chain and off-chain projects already positioning themselves in this space. Ondo Finance has rolled out tokenized public debt products, allowing stablecoin holders to invest in U.S. Treasury bonds and investment-grade corporate bonds through their tokenized funds. However, it's worth noting that this sector still carries the following risks. Connecting real-world assets to the blockchain necessitates dealing with a myriad of legal and regulatory issues. The cryptocurrency industry is still in its nascent to early growth stages, and there is not yet comprehensive legal clarity on the valuation and regulation of cryptocurrencies.